Hey everyone, welcome back to the channel. I'm Doug, the Retirement Guy. We got a review of all the Roundhill Investments weekly pay category. This is the one that they pay every week, all 15 funds. We're going to give you the hot updates. We're going to reward our cash cow award and our total returns. Let's get into today's video. Notice to all viewers, past performance does not guarantee future results. This is all for educational and informational purposes only and should not be considered financial advice. If you're looking for financial advice, always contact a financial advisor. Okay, taking a look at this week's weekly pay in gross. Now, like we said, these are the 15 funds that pay every week. They're all in that weekly category. This is not every one of the funds that Roundhill offers. We will update the other ones as they come in. But we wanted to give you guys a quick update here. These all came out on Friday. And there were some interesting ones to it, and I want to go through this. The very first one is going to be QQQY. This one had an 11.45% increase in the past 7 days. It went from $37.12 up to $45.92. Huge increase in that number. It's way above the 4-week average of $40.52. So there was a huge change in the Coinbase package. And we always believe that this is a very strong piece to be a part of. The YOLO is another one that has just rocketed. Now, we've been talking about this on the channel for quite a few, I almost want to say 2 months already, that this is a fund that we tell everybody that was time to get into, time to invest, and you can see why. This thing has had a 19.44% growth in just 1 week alone. That's given a 41% growth over 30 days and 57% over year to date. Now, the 4-week average is $71.22, and it's at $84.78. So you can see we're well above that 4-week average. The other fund that did phenomenal was the MSTR. That thing went from $34, from $29 up to $34, a 9.2% growth on this fund here. And the nice thing about it is the 4-week average is still $33.36, so it's just about $1 over that 4-week average. So it's still got some room there. And then our final one was Tesla. Actually was at the close, it ended up lower than the last week, but overall, that thing had a 7.74% growth over the past 7 days. So when we look at that, we still have a 4-week average of $37.79 and a $39.07 buy-in price. Very, very strong piece there. And then the final one, the WPay, which we're going to do a separate video on because it's been 30 days. It's time to give WPay its fair share. And just to see what's going on there, that thing rose again 2.3% for a 6.49% over the past 30 days, and just a hair over its 4-week average. So as you can see, the very, very strong numbers in the actual natural growth of the funds, which we love to see. Hopefully they do the same thing with dividends. Let's take a look at that next. Well, when we take a look at dividends, yep, exactly what I was expecting. It's a nice bag of ups and downs. So let's take a look at the first one. YOLO is the largest paying dividend of the week at $1.82, down from $2.23. Still, the distribution is up to 112%, so they're still doing some solid, fair numbers. At number 2, we go to the yellow, which is NVDY. That thing went from 61 cents to $1.12 this week. Huge upside on that one. A little bit of volatility, a little strength coming back to it. Big numbers there, $1.12. It's given that 118% distribution rate. So that one is definitely dramatically up. But you got to remember, this is just a spike. I'm not going to tell you. We'll show you here some averages that we have just a little bit later. But remember, this is a spike that you have. So you're not consistently getting that. And then our third one that we go into is going to be Tesla. The TSLW went from 77 cents to 90 cents this week. And this one is our number one for yield distribution right now, is 121%. We called that one many weeks back. We said Tesla was the package to be into. They're recovering. They're doing well. And right now they still have some volatility going on, so that's what's generating that great dividend. Now some higher notes that we do have to talk about. Number one, WPay. This one here went from 51 cents up to 88 cents. Now, if you don't know what WPay is, basically they buy every one of these funds that you see here, and they've made an equal balance across the board, which is about a 6% of each one of these funds, and they use it accordingly. So when you see one of these guys are doing big, like HOW or like NVDY, you're going to see WPay reward as well. The distribution rate right now on that one is 84.66%. We've always said that was a hold until we get some track history onto it, and we're starting to see some pieces of that. The next one we want to talk about is going to be PLTW. That one has turned a corner. Last week was $1.11. You see this one's down to 86 cents. Still a very, very strong payout at 98.26%. And then our final one that we want to always keep an eye on is AMDW. And that one, pretty balanced. 70 cents last week, 78 cents this week for an 89.25% total. Now, one of the things I've said too is you look at almost right down the line, other than WPay, every one of these funds that we've just talked about have been ones that we've been talking to keep an eye on, that they've been in our top 5 on a week in, week out basis. So we're really seeing some performance from those pieces that our research is definitely telling us that we're doing the right thing. Now, rewarding ourselves with the cash. Let's take a look at the ETFs with the compare, so we can do that cash cow. And what we have right now, what we do here, if you don't understand this one at all, I'll explain to you real quickly. What we're doing is we're taking a new dividend and we're dividing it into what percentage of the fund's price is the new dividend. So what it tells you is how much of a return you're actually getting back. And when we take a look at this one right now, Tesla at $89.07 fund cost is paying you 90 cents this week for a 2.33%. That is huge. The basis points that we look at this is about 1.63. Okay, anything above 1.63 is actually paying out more than what we expect. And how do we come up with 1.63? 1.63 is the average that we get from ULTY. We get from a few other high output ETFs. So we always said 1.63 is really right where we're shooting at. So the second one that comes into this is going to be NVDY. NVIDIA has done very well at $49.72 for $1.12 this week of 2.27. And then the final one is HOOW at $84. We're giving you $1.82 for a 2.15 return. Now remember I told you about the 1.63%. That's what ULTY pays. Look what Roundhill's WPay is now doing. 1.63%. Very strong numbers. What it's telling us is that we're getting definitely a bonus with WPay, and we're getting a lot of traction between the big three, the Tesla, the Robinhood, and NVIDIA. So these are the areas that you'd want to start to look at investing. Other areas, AMDW again, 1.72%. Anything over that 1.63 is where you really want to park money. This is cash income creating funds. So our cash cow goes out to Tesla. It's the first time Tesla's won the cash cow award. We're proud to give it to them because of their performance, because of their 90 cents, giving us that 2.33% return. Now let's take a look at the return on investment. Now in this one here, we use the average dividends. So this is the average price across the board. Okay, so this is what you've looked at all year long, what their average is. So when we see something that's paying out huge, and I'll go really instantly, I'll give it Tesla at the bottom. Tesla on average pays 49 cents. This week it paid 90 cents. This is how we kind of compare things and find out. Now, return on investment. If you don't know what that is, I personally invest in this. What I take a look at is how quick can I put my money into the fund and get my money back out. So if I'm going to buy, we'll use WPay at the bottom. If we're going to pay out $54 to buy one of those shares, how fast am I going to get my $54 back and turn this into a real hardcore cash cow, which is I have all my money taken back out of it from dividends, and then I just sit back and collect the dividends week in, week out, as long as it's continually paying a dividend. This is why we use the average. So if we're using the average, we get a better idea exactly of what's being paid. And we're not using some big shocking number like a Tesla doing 90 cents or HOW paying $1.80 something when their average is really $1.31. So we take the current price, because we're going to be investing into this, with the weekly average, and we get a return on investment in weeks, and then we get a return on investment in total years. Now, I've always said what you want to do here is always be under 1 year. Okay, it's if you can get something 1 year, it's almost a no-brainer. Now, that's basing this off of if the average price stays the same. Now, if the price goes up, your timeline's going to go down. Okay, if your dividend goes down, your timeline's going to go up. Same thing with the price. The price goes up or the price goes down, it'll change your timelines. So the number one winner right now is actually MSTW, that will basically clear itself out in 50 weeks. So just under a year, using the average. Now, we've done other videos where we've used the current fund, or we've used a 4-week average. What we want to do is use the total every dividend paid average to give you as close as we possibly can in investing purposes. The number 2 onto it, AMDW, with that $46.02 fund paying an average of 68 cents. It's 1.31. So basically a year and a quarter, or 68 weeks. And our next one would be AVGO, the AVGW one, 74 cents average, $55 fund. It's basically just under 1.5 years. So why is HOW so off? We'll go with HOW, the one that we've talked about for a long time. Well, it's just exactly what I just told you. The price of the fund has gone up to the $84 with a dividend averaging $1.31, which is great. I love the $1.31 investment. I personally own this. I bought this a while back. But at $84, you can see it goes to a year, 1.24, 64 weeks. So that is really dialing it back and not as exciting as it once was. So if the price starts to drop again, if we get the price down, it'll probably be time to buy it. Right now, we're gaining on both sides. We're gaining on the dividend and we're gaining on the growth. So right now, that gives you the 3 major ones to take a look at. Total returns. This is what you always want to look at when you're doing investments. Forget everything else. Start off with total return. Who's paying you the most money from the dividends you gain plus the year-to-date growth or loss? So our number 1 is HOW. Dividend-wise, 112% plus a 57% natural growth for 169% total return. That one there, you can brag about your friends of getting 112% dividend because you're getting 169% total return. Our next one, that's going to be the NVDY plan. NVDY, 118% year-to-date growth and in dividend, and the growth is now just finally down to negative 0.34. So it's recovered where it was previously. So you're at 117% total growth. And our third one, Tesla, 121 with a 23% loss, and we're slowly cutting into that loss, okay, for a 97%. So if you're brand new into this and you haven't bought any of these, almost literally the growth, you take the growth out. You take a look at what the year-to-date dividends are paying out, and you give yourself your own fund. So some of these are really big cash cows right off the bat. So across the board, we also look, there's a lot of them to talk about. We love the Roundhill funds. They do a ton of money with it. We take a look at things like, the COIW is recovered to 54% total return. We take AMDW, has been holding in there since day one, 78% return. A lot of things in there, and you can't give up on WPay, which is, like I said, only a month old at 91%. So Doug's picks for the week. We're going to start at number 6. Now, I'm going to tell you guys right off the bat, these are not just go out and buy. Because Doug said so, don't go out and buy. What these are for, these are to take those 15 funds and break it down to give you 6 items to go look at, do your research. Will it fit your portfolio? Will it fit what you're looking for? Will it do what you want it to do? And these are things, so we're trying to cut things down to say, hey, these are 6, go take a look at, do your research before you buy. Number 6, WPay. I believe that this fund right now, after only 4 weeks being into it, I'm seeing some positive answers coming out of it. A 91.16 total return already. A 1.61 return on investment. Now that's a little bit high on return on investment, but we're getting a solid dividend, we're getting a solid growth, and we're getting a nice total return off the package. So I think this is one you really got to focus in on. Like I said, we're going to do a separate video onto it just to give you an idea what's happened with WPay. Is it good? Is it time to do it? I still think it could be a holdback because it's only a month old. But again, that's why we tell you to take a research. Number 5 is going to be the Tesla program. 97.08 total return, 154 return on investment. So what I'm saying is this one is doing well. I think the price is still in line, that you can still get a nice deal onto it and get yourself your money back fairly quickly and have a nice cash cow. Pays out very strong, especially when there's a volatility to it. Number 4, GOOW. Now I know this one, the people are going to probably leave comments on this one and so on, but Google has got some growth. This is one of these things I put as, it probably should be down at number 5 or number 6, but Google is going to have some run. They have their AI technology that's coming into play. They've gotten through their lawsuits. They're reorganizing everything that they got working, and they are coming stronger, and you're going to see this thing grow and grow and grow over time. That's why we say I think Google is probably one of the quieter ones on the board that are going to turn around and start paying. PLTW. I was off on these guys. We're back onto these guys. 101 return, 1.47 on return on investment. I think they've corrected their issues. They are now turning things around and coming back stronger with it. Number 2, COIW. I still believe the coin package is the way to be into. If you want to be into Bitcoin, if you want to be in the something different than the dollar, this is where you want to park some of the funds. With that, I know the total return looks small, but it pays some solid dividends. And of course, number 1 is HOOW. I will put a huge asterisk with this because I've watched it for so long. Our number 1 winner is HOOW with a strong total return at 169, a return on investment of 1.25 years. But I'm telling you right now that this price is so high, $84. I have to put the brakes on, say hold. Keep an eye on it. Focus onto it. If we see a little bit of a drop off, the reason why HOOW has done so well is because they've had positive remarks about their growth, growing into the Europe, growing out of just the U.S. They are the future of trading. So the price will probably continue to go up. But right now, I really have to say, I'm a hesitant. I'm not buying at 84. I'm expecting this to kind of come back a little bit and probably pick some up around that's in that 70 range. But I want to make sure you guys are looking at it very seriously because it is a huge cash paying cow. So guys, hopefully you liked the video. This is Doug, the Retirement Guy. If you're not a member, hit that subscribe, hit that bell notification. Also leave any comments down below. And if you can support the channel, don't be afraid to go to the Patreon, sign up on it. It's free, and you get a lot of information off of that. Guys, thanks, and we'll catch you next week.